The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is December the 20th, Friday, options expiration. My pleasure to be here, and of course 877-927-6648 is the number to call, and I'd like to hear from you. A couple of things that we'll go straight into right away. That is, number one, new all-time highs in the Dow. So the Dow is at 16,240, up 61. The S&P is lagging a little bit, but it's also in leg B in the daily chart, up 950 at 1811. All of a sudden, we're talking 1800s. Isn't that amazing? Comp index up 30 at 4,088. Gold is up 9 after being smashed yesterday. I'll talk about that in a moment. At 1202, silver's up 21 cents at $19.40. Platinum's up 1470 at 1334. High-grade copper's up at $1.70 at 331. That's good. It's back into the 330s again. Crude oil 98.77, holding in quite nicely. And you've got bonds up 21.30 seconds at 129.27 30 seconds. The dollar is down some, and the euro is up just a little bit. Now let's just go to the most important thing that I wanted to talk about immediately. Was on Wednesday, what I'd said is, even though I wasn't thinking it could happen at that particular point, if the Dow closed above 16,030, and at that point it was way below, but if it closed at 16,030, especially the volatility index, which, let me do that right now, the volatility index, VIX.X, which was in leg D, turned around. What happened? This was absolutely fascinating to me. Remember, I spent just a few moments on it, and I said, it's really interesting that the volatility index 120-minute chart, even though the daily is in leg D, and D is where you've got to be careful, that's where you can get sharp turnarounds, we were only at C in the 120-minute chart. And I said, I don't know how it's going to do it, but the volatility index should go above 1665, even if it's by 1 penny. Well, it went to 1675 in that quick move down, 60 points. Moved down in the Dow as the Fed came out with the news, and then it turned around, and the volatility index went from 1675 straight down to the low 14s as the market went straight up. Now, it's so fascinating to me. Why? Because look at this EUR-USD. Same thing. The euro was at peak C, and I said all it needs to do is go 1 penny above 1.38100. to 1.38101. That's 4 decimal places to the right. And pop, that's exactly what it did. It went to D. The euro is now pulled back quite sharply. It is a D in the daily. The weekly is C/G, still holding very well. I'm kind of impressed at the way it's holding, especially in the monthly chart. But look here, the dollar. The dollar had a nice bounce, but the weekly chart says it's really, really struggling to get traction. So let's just put this together finally. I want to look at the gold index. I'm going to look at the continuous contract. Why? Because this goes back so far. There, look at that. A whole series of peak Ds and a peak F over there. And then what do you get? Another D, and then all of a sudden it goes DEF. Well, I got 1949.70. That's an incorrect price because it always gets smoothed out. So the high was, now it's 1950.20, but it was September of 2011. Let me put that. That's the most important. The date will never change. The date never changes, but the price does because it gets smoothed out. Remember what I said? The arch formation can become an M formation. That M formation can break down if the left side low bar is taken out, and then it can slide quick enough to make a 1-to-1 downside move And what happened is it went all the way down to, I'm not going to give you the price because that's changed, to the low of June, I think it was, June of 2013. It bounced, made a failed A, and that low, I've got it now as 1179.90, but that's, as I say, it's changing price. That left side low bar, as far as I'm concerned, is going to be taken out. Now, I know a lot of people are looking at gold and saying, we're so close to some kind of a sharp rally. Yeah, I think that we could quite easily get one of those H-pattern bounces. But what I'm really looking at is that two things. One is on a purely technical basis. I'm anticipating that there's a low made in the 1100s sometime by about May of next year. And number two is that when I start to see for sale signs, as I mentioned to subscribers this morning, for sale signs on the gold, buy and sell gold here in those stores, I'll know that we're getting really close to some kind of a very tradable intermediate term low. I don't think we're there yet. Yep, we can get bounces, but I don't think we're even close. And that should put some support, not necessarily upside pressure, but support into the Dow. So I'm going to go to our first caller. We've got Stacy in Denver. Hi, Stacy. How are you?
Good, Basil. How are you doing?
I'm doing way better. Thank you very much.
Could we look at Boston Scientific today?
Yes. Now, folks, Boston Scientific is symbol BSX. It's trading at 11.69. It's up 7 cents. In the larger scheme of things, it had a spectacular move from the H pattern way down to the 5 area. It eventually then touched 479 back in July of 2012. Let me just put that in, 479. 4.79. And that's an up arrow. And then it went to a peak C. Now, do you have any position at all? Or are you still, this is one that you're still just waiting to see if there's any sign of resiliency and a cushion on the downside?
Yeah. I definitely have a position. I sold at 12.26, 40% of my holdings.
Right.
And kept everything else. And then I actually bought back about 1,000 at 11.28.
Okay. So, and it's trading at 11.69 right now. So 11.28, did you do that in the last week?
Yeah.
Yes,
yeah,
very good. That to me makes it so much easier because you have got the most identifiable low bar, while at the same time giving yourself a pretty decent cushion because 11.55 is the 9-period exponential moving average. Let me just quickly look at this on a 120-minute basis. So it goes A, B, C failure. Let me type that in. A. Well, first of all, you've got the position, and I have to congratulate you for first of all, exiting strategically,
yeah,
and for hopping back in very appropriately. I think that the entry that you've got right now is the best risk-reward that you could have given yourself based on the patterns that I'm looking at. And one of the reasons is this. Not the monthly chart. The monthly chart is still very strong. But the daily chart is saying to me, not the daily, the weekly chart is saying to me that there were two patterns I was looking at. One is an arch formation at the top. One is an arch formation at the bottom, which I drew in a little while back. And this is held beautifully. So here's what I'm thinking. So far, I think this could be considered a high-level consolidation. Boston Scientific goes into the category of former darlings that just became the run away from stock. It did every single thing wrong to finally getting their act together,
yep,
to a recovery stock. And now the real thing is this. Is it going to actually go to a leg D in the monthly chart, which would be above 12.48, the high of October? And if it does that, because the 9-period exponential moving average, it was exactly where it stopped at 12.14, is actually around about the area. Is it getting ready for another burst of strength with a very strong MACD and stochastic to be able to tackle I would have to say, to tackle an area that on a visual basis should become 1531, 1422, I'm just naming previous highs, 1420. The moment it took out 1177, those were between 14 and 15, those were the upside targets. So here's my thinking. On one core position that you've got there on your 1,000 shares that you've got, which is the brand new position,
Right.
I would say possibly as between a half to 3/4, I would put a stop. 20. The low was 1112.
Right.
I would put a stop at about 1106 to 1098 on a pretty good portion. Now, what is my thinking? Why would I even do that if it was going to come back after trying to rally? One of the reasons being that the base of support that it's attempting to form here is not just strong in the daily, it's strong in the monthly. It is the weekly chart that is the question, and that's the one we've spoken about this before. The
Right.
weekly is the one that takes the longest to self-correct after having a very strong pullback in the daily chart. So I'm going just for the moment, and I'm going to do this. I'm going to give you two levels to watch.
Okay.
And the one says on a very short-term basis, 1150 to 1140 is probably the area that on a third of your position, I would say just watch it, because that's where you might want to lighten up a little bit. But I would also say that if it doesn't smash down there, if it just kind of gently goes to that level, and then it actually has a pop-up from that level, that might be where you could even add another quarter position.
Okay.
So the reason why I'm saying this is that this is a high-level consolidation so far. And
Right.
it's become a very quiet, it's a stealth bull market in Boston Scientific.
Right.
You wouldn't think that, but look at the chart of the monthly. It's a beautiful-looking chart, and it's still a beautiful-looking chart. So the reason why I would like somehow or other for you to keep it, and I know what your original stop was when you went in at 11.20, what, about 20 cents or something like that?
Yeah.
So I would still keep that 20 cents, but maybe I'd make it on a half. So a half position, I start to lighten up if it took out 11.40, just a little bit, if it actually took it out.
Mm-hmm.
But that position that you take off, I'd be watching it and carefully eyeing this, because in the next 2 to 3 weeks, if Boston Scientific pushes to 11.80 instead of breaking 11.40, I'll talk about that in a moment, because there are just a few of these stocks that are showing fabulous resiliency. This is one of them. So I'll be back with Stacy in a moment. We're looking at Boston Scientific trading at $11.70.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back with Stacy in Denver, and the Dow's up 74, S&P's up 9.5. Very good action considering that we are in a very quiet period. But as I said before, once the second week of November comes around, and if the market is up, my impression, I didn't go back and look historically, but my impression has been that the market always closes at or very close to all-time highs when the final day of December comes around. So that's what we can expect here. Now, back to Boston Scientific. The more I thought about it, Stacey, the more I'm going to say to you, I'm not going to mess around. I think you got in very nicely. What I would say to you is this, that this is a very strong leg A, and it had a whole bunch of testing that it's done. The stochastics at 53%. MACD has turned positive. I like the price action. I believe that the 11, let me just get the exact number here, 1147 to the open 46. The 1140s should be very strong support over the coming week or so. And there's a very good chance that if it closes above 1189, I don't want you just to test 1190. I want you to close over 1189. That's the high of the 9th of December. I think that the candle that we'd be looking at, that's going to, it's definitely going to have very strong resistance between $12.12 and $12.50, that whole area. How and if it's able to pierce that by Wednesday, that's Christmas, right? By the last day of next week would be really important. If it's able to do that, that just makes the monthly even stronger. So I like it. I think you're in a great position. I would only say to you on a shorter-term basis, if it pierced 1140, I would just think about maybe taking a little bit off. I try as hard as possible to try to keep your stop as close to your 1120 and try to stay in position, that is, because at this particular point, I think it's acting very well. At some stage, it might have to test the $10.70 to $10.50 area. I would love to see that happen after it pushes into the 1250s, and then it's like a whole new ball game. You've got your price, you can take some money off, and then see if it comes back and how deeply. I like it. I think you got a great entry price. Congratulations.
Thank you very much, Basil.
Thank you very much for calling, Stacey. Have a great weekend. Let's go to Dan in North Reading. Hi, Dan. How are you?
Good. How you doing, Basil?
Very well, thank you.
We're very glad to have you back. Glad you're feeling better.
It's great to be back. Thank you.
I've been watching coffee here, actually looking at the contract, the KC, and saw that it finally came back down to its old low from a few years ago.
Right. Now, this is really interesting. Let me just tell people what we're looking at. Dan's looking at JO, but I'm actually, just before we go to JO, I'm going to show the continuous coffee contract. And that continuous contract made the pattern that I call the Eiffel Tower. It looks exactly like an uppercase A, straight up and straight down. And it did that from 2009. The most important low, I'll give you the date, that was in December of 2008, actually. There was a double bottom 4 months later, but it went A, B, pulls back, and then goes A, B, C, all the way to a peak D, and then it plunges. But it didn't just plunge below the low. I'll give you the number, but it's a moving target. In the 167s, back in December of 2008, it plunged down to the most recent low in the continuous contract of 104, round number low, in the monthly, in what looks like it's going to be in December, a trough E in the monthly. In the weekly, we've already formed a trough F, and this is leg B with a very nice candle. If it closes anywhere near here by the end of the day, and the daily chart has got from a trough, that's a trough C. Well, it's a second sell mode. It's gone peak A, B, C, D, pulls back, and it's a question whether that was a peak A or an A/B that we saw. But the fact is that coffee, the continuous contract, which is trading up to right now, has had a really nice high-level consolidation after making that most recent low, and the low was the date, double bottom low, 104.05, and then 104.00 on the 7th of November. Now, the way you would play that if you were going to go long is through the JO, correct?
Yes. Yep.
Okay.
Which
now
obviously made a much lower low, but I would use continuous as well.
Okay. Now, how do you do this? Now, I've never actually traded the coffee contract. I want to do this as, I think I know what I'm looking at here. We've got a break coming up. It's going to give me a little chance because I'm looking, it's at 22.77 right now. It's the area between 22.33 and 22 or 21.90 that really is important. Let me think about that, and I'll be right back with Dan North Reading and Lou Nasher, who wants to look at the NG, the contract natural gas. A lot of people ask me about it. I'll be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, Visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Target Technicians Hour. We're up 76 in the Dow, up 10 in the S&P, and we're on in North Reading, Massachusetts, and we're looking at JO, which is in fact the iPath Dow Jones AIG Coffee ETN. The more I thought about it, because I quickly ran through some of the other commodities, and there are a lot of commodities that are just starting to have a very nice up spike after major selling has been unfolding for weeks and in many cases months. So I'm looking at coffee, and I can't do the whole commodity area because we've got some fabulous experts. Larry's great with his the technique in terms of looking at the price movement of Gartleys and butterflies, and you've got Andy Hecht who does it a slightly different way, using the fundamentals as well and relationships. I'm saying that from what I'm looking at here, there's a chance that even if there was an arch formation to form in the weekly of the coffee of JO, which is trading at 22.79, I think taking a small position would allow you the benefit of doing two things. One, allow you the benefit of following it so closely that even with the tight stop, you'd be able to know whether or not you want to add to it or subtract or whatever it is. But I'm also saying, it needs, after the move that it's had in the daily, it needs at least to fill some of the gap, even if it's just below 22.24. So it's trading at 22.79. I don't know what it trades at in terms of prices, what every tick is worth. All I'm saying to you is that on a price performance risk reward, my thinking is between 22.34 and 22.13. That's the best case to enter it. If you miss it before then, there is so much resistance coming up that it would have to move really quickly to 24.03 for you to feel like you've really missed it. That's number one. Number two is if you don't get it in that area that I'm looking at, which is about 40 to 50 cents lower, if it pops up 1 penny above the 23.10 high of the 16th, you could take a smaller position because you got in later, and you could have maybe the same kind of stop that you would have had in well, I wouldn't do that. I tell you what I would do. I'd either have the patience to wait for a pullback, and if you could compromise and say anything below 22.40, I'll do a small position. I'll only add to it if it ever breaks 23.10. Or you can say if it breaks 23.10, I'm prepared to start a very small position. And that small position is like a pilot-like position. If it just takes off, that's fine, I'm in it. But if it pops up and then it pulls back under that 22.40 area, that's where you could start to add to the position. But I like it. I like the way the weekly is performing. I think it has made a fairly significant shorter to intermediate term low. And the only way it would crack that is if it suddenly breaks 21.44. If it breaks 21.44, then you've got to be careful of a retest of the lows. So I hope that helps you, because it's the only way you can start in the position and then benefit if the weekly is really starting to build a very nice, it's like a little triangle shape, filling in every bar has been almost filled in as it makes higher highs. That's pretty solid action so far. So that's my recommendation. And I would do it on the JO contract. I don't know KCH. I'm just going to see if that's the contract that people use. Yeah, KCH, it's very similar pattern. I'd have almost the same analysis on the contract itself. So JO is a very good proxy for what we're talking about.
I'll be doing the ETF anyway, but...
Yeah, the ETN, right.
No.
So, okay, good. I hope that helps you, Dan. Thanks so much for calling.
It does. Thank you, Basil.
Thank you very much. Have a great weekend. Let's go to Lou in Nashua. Hi, Lou. How are you?
Good. How are you, Basil?
I'm doing very well. Thank you.
Good. I hate to beat a dead rush, but natural gas. I got out of it too early, so I'm just wondering.
So you made some money, but it was a little early, and the difficulty has been getting back in, correct?
Right.
Okay. Now, what I'd spoken to you about, Lou, was that I was looking, because you had spoken about January, and my impression from the time we spoke, which was about 2 weeks, maybe 3 weeks ago, was that I love the price action in the natural gas, the UNG, and that the arch formation in the monthly chart was suggesting to me that let me just double check it, NG, yes, not the natural gas commodity itself, but the UNG and the continuous contract, the NG contract, has shown fabulous signs of what I call the H formation, lowercase h, that has a very successful break to the upside. And that's what the weekly did. And that has the potential in the monthly. So now how do you do it? Because it's had a spectacular move. It's gone, let me just go back to the UNG. UNG's gone from 16.91 to 21.87, the price is at now. And I've got it at an alternate count F/B. Now you're using the options. See, so the reason why I was hoping that you actually held onto the options is because we were looking at weeks and weeks and weeks. And I was loving the chart formation, and that meant that your downside risk was not that much, but the upside gain was very good. Now some of that gain has been sacrificed. It's not to say that you can't go back in, but the risk is that I would not do a January contract. I'd be moving out. I don't know if they use the February contract. But how to do it now when there is a chance that at 2187 you've got yourself about a point of risk to the downside, and that point of risk in an option will show up as probably, even though it's going to be further out, it'll probably show up as about a 37 to a 41% decline in the contract, depending which contract you get. So it's really tough for me to say, just sit this out. You're going to have to wait for a test of the 20.50 area. It could even slip down to 20.20 if it starts to decline by Tuesday to Wednesday of next week. Because if it hasn't done that by Tuesday or Wednesday, wow, it's going to be really tough, because that's very positive action. So I'm going to make the suggestion. Think about it. I don't want you just to jump in and do it. You don't have to do it now. You'll probably have time Monday or Tuesday. If it pulls back a little bit, even if it's only towards the 2187, if UNG pulls back to 2160 to 2145, at that point you've got less of the downside than if you've got it right now. But that's where I would think of maybe even just one contract, and I would go a month further out. And here's my reason. My reasoning is this. It's leg C in the weekly chart. You've got to allow over the next 3 weeks at least 1 week where you're going to make a peak C. It could be anywhere, but it will be a peak C. How it pulls back is going to be very important. But then you've got leg D still to come. And that could take you out 5 weeks or maybe 6 weeks. So I'm thinking that your upside potential is still there, but obviously getting out a little early meant that the best risk to reward is gone. But I still love the contract. I think UNG is looking great. How it handles, it's a 2187, how it handles the high of 24.09 made in April of this year is going to be the issue. But boy, you would love to have an option that goes anywhere towards the 23-24 area, even if you bought it at today's high. So that's my recommendation. Maybe buying it right now is a little tough, but I would think maybe of one position towards the 21. My preference would be closer to 2113, but anywhere in the 2140 to 2130, or maybe 2120 area, one position a month further than the January close, and that February would be perfect, because I think that's where natural gas has the potential to start to break out. And I think that's the only way I could play it right now. If you were going to buy UNG, I would say start a position right here at 2186. A small position, I would consider adding 2 more positions, one at 2113 and another at 20.20, and I'd have a $1 stop on the whole position. But that's different. You didn't ask me that question. So if you're using the options, wait for about a 30 to 40 cent pullback, and then I would start the position, one position, and you've got to know that that position has risk to it. But we're looking at the closeout date going towards the middle of February. Hope that helps you, Lou.
Yes, it does, all the time.
Thank you very much. I appreciate your call, and have a great weekend.
You too.
Thank you. So, folks, this is what I want you to do. There are a couple of things that I want to look at here. And this is the bigger picture. As you know, I've been looking towards 2014, the third month, maybe the fourth month, maybe the fifth month, as being the acceleration where things can get really crazy in at least the Dow. We'll see. We have a position today that just got taken out third time. We've had fantastic gains in the IBB on the short side, and we've given up some or almost all today. We've made some money, but we've given a big chunk of the gains, because it's the first area that money managers keep going to whenever there's a rally. I suspect that we are getting closer and closer and closer to where there are fewer and fewer stocks that are able to keep the IBB up, and that's the way I've determined to to mark time going into the beginning of next year. We also took fabulous profits, not anywhere close to what it was. It was up 230% on our right 8 position. We took 166 on the final position, 166% gain today. I love those bigger gains. Yeah, I apologize. We could have got out with even bigger gains, but I wanted to add to it. I didn't realize that they did have good earnings, but they gave a very poor outlook. Well, I'm liking the gains, not so much the outlook. So we might even come back into the stock at some particular point. I'm not interested right now. Fortunately, we have another stock that's taken over, and it's up 50% right now. And I think it's really important just to focus on the stocks that have the potential to go from daily movers in the Chapman Wave methodology to the weekly, and then hopefully the monthly starts to kick in. And I'm just really upset. The UNG, I spoke about it day in and day out right here. I even mentioned it. We actually bought it once and then we got out. I didn't go back in. There's no excuse for that. Do all your analysis. You do everything. Just a fabulous gain. In fact, I wanted it for a longer term position. So we've missed that, at least in this particular move, the UNG. So I like this market. I think it's offering challenges. I'm not afraid to go short certain areas. The timing is absolutely imperative. Fortunately, we got in the IBB, a point of the all-time high. So instead of seeing what was it? I think a 12-point gain, 10% almost. We took a 1% gain, 2 points, big deal. But it's the technique, and the technique says we have focused on your IBB. We've done it 3 times successfully. Successfully in that. From the moment we got in, it did drop sharply, didn't get out in time, but next time perhaps is the one that really, that's where you're going to start a deeper and longer pullback. We'll see, I don't know. But I think that that's the only way to go about this market. Individual stocks, look at what you've got, and be prepared to take a stand. We took a short position today, actually a little heavier short position than we would normally do on a particular stock. I didn't even know that the CEO was being, this guy is one of the biggest, he's a great talker. You know, there are guys that talk and produce the goods, and there are guys that talk and very often produce the goods, but not always. And this is one of those guys. And this is one of those cases where I think his talking has gotten a bit ahead of him. Normally, you know, he can produce the goods, and every once in a while he doesn't quite come up. And I think this is the case. We'll see if the stock is going to suffer. But the stock says it's gotten ahead of itself, so we will see. Now, there are a couple of things that I'm looking at. Was mentioned the Den. Terry says SGG getting a little follow through. Well, look, if you're looking at SG, which is the sugar continuous contract. Oh, what happened here? SGG. There it is. Yeah, that's that talk. The same thing I'm talking about all the time here. That when you're looking at very sharp declines in some of these commodities, the sudden upward spiral that just occurred, that's something to take note of. And if you're looking, what's very interesting, if you're looking at the SLV, and in this particular case, the SLV is the iShares Silver Trust, which has not taken out the left side low, which is the low of the 3rd of December at 1828. Instead of what it did, it had made an arch formation, retested yesterday, and made a low slightly higher at 1842 and a very nice candle today. It's that weekly chart, the H formation, that I'm really interested in. And this is a little different. Why? Because the monthly is testing the 200 EMA. We'll talk about that when we get back. We're looking at the Silver iShares Silver Trust.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Of course, folks, do listen to the show with Nico and Paige coming up. Living a Primal Lifestyle is a fabulous show, of course. And just stay tuned with TFNN. We've got programming, fabulous program all day. Now, let's just quickly run through the numbers. Silver, I think, has a chance to bounce, but I really think that it's the H pattern that goes to an M pattern. The GLD has already broken the left side low, and silver usually follows at some point. That's not to say that, so that's an AB alternate count. This is a D to the bottom, the daily right there in the GLD. A nice candle today. Usually Fridays are terrible candles, but we already did that over the last 2 days. I still think that the GLD, that arch formation, the scallop formation, should see lower lows over a period of time. So, yeah, I could see a bounce, but my suspicion is gold had its day. Unbelievable 11, 12, 10-year rally. It just needs time. You know, that's the way things work at Wall Street. Just you rotate, and then you got to sit aside and just have patience. So bounces, absolutely, and certainly just a couple of stocks that I really do like. I might even recommend a gold stock in the next day or two. There are a couple that are just starting to show that they have inner strength. We'll see. So let's go back to the Dow now. I'm going to keep this as real simple as possible. This is alternate account E/B. Everything about this is probably B, and that we should go to a C and then a D in the daily Dow. The weekly is recycled. Now, if the weekly is recycled, then this is really only new leg B up. This neck formation, this breakout can continue. So that would imply to get to a leg. So to make a peak B, let's just say the whole of next week's down. That'll be a peak B. Might be a G, but let's just call it a B. And then the next week goes to a higher high. That's C. And then that first week of January, you get a peak. So what we're looking at here is nothing can happen in terms of the wave count in the weekly of significance until about the second week or so of January. That historically there is precedence for the second week of January as being some kind of a top. I don't think it'll be a serious top whenever we make the next top in the weekly chart. We've recycled in the weekly, so this is still leg D, and we are challenging the very long term. Remember, I said, are we here? Well, we haven't yet made D. This is still leg D. We haven't made a peak D. So that has to be set aside now. This is still the extension up. So in terms of December, in terms of the Dow, in fact, has gone to a higher high. The S&P, if I can find my S&P right here, SPX.X, the S&P has just gone to an all-time high, so that it is, in fact, in leg D as well in the monthly chart. The QQQ series has extended leg E and whatever it is in the weekly, which could be an F, and we've recycled to the upside in the daily. IWM, I don't think had. IWM is acting very well. It hasn't yet made leg D or whatever it's going to be in the daily, but that'll be leg F, or it's recycled in the weekly. I have to tell you something. People are being forced by what the Fed has just done, and I have to say, kudos to Bernanke. He came in. He then saw the market saw the Dow go to the 6,500s, and the market right now is trading at 16,263. That wasn't that wasn't the Fed's purpose ever to do that, but he said it's going to be my purpose to get the stock market back, and that's what he's done. Well, congratulations to him. So there's a recycle going on right now, and thus far, it's still very positive. So have a wonderful weekend. Please check out my opening course, my daily subscription service. Very comprehensive look at the markets, plus, of course, our stocks that we have, and follow it every single day. Stay tuned for Nico and Paige, and have a wonderful weekend. I'll be back on Monday.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.